We're joined by Andy Xie. He's an economist well known for his contrarian views. He actually did predict the subprime mortgage crisis, also the dot-com bubble and the '97 Asian financial crisis. Andy, thanks for coming on. Well, you know, that's quite a track record you've got there. So are we in a bubble now?
I think some parts of the world, it's...
I'm talking China.
In China, it has a property bubble. And the reason is because the exchange rate appreciation expectation has been sucking in money, and that's creating increasing money supply. So despite a very rapid economic growth rate, interest rate is very low. So that's leading to speculation in the property market. So I think that the property price probably is 100% overvalued. And normalization will only happen when interest rate is sufficiently high, just like what happened in the United States.
And if you raise interest rates, you suck in more money, don't you?
I doubt it. I think people kind of come in not for a little bit higher interest rate. In emerging market, usually hot money comes for stock market bubble or property market bubble. Anytime that you have a currency appreciation story, somehow there will be bubble. And I think that it's happening in China.
So what you're saying also is that these rising house prices, and by the way, they're at the moment showing some signs of slowing down, if not actually depreciating right now, but this rising house price market has sucked money out of the equity market, which is why it's done so badly.
Yeah, and the stock market and equity market have been decoupling for the last couple of years. The stock market collapsed in 2008 from 6,000 plus to 1,600. That really spooked a lot of people, so especially rich people who thought that property was safer. So they've been pumping money into the property market, not the stock market. That's why we have these 2 years of unusual phenomenon that the property market and the stock market are decoupling.
Citigroup, BNP Paribas recently predicted that we'll see a 20% drop in home prices in 2010. Do you A, agree with that? And B, would you see a 20% increase in equity indices?
Well, right now we're seeing a moderation in the secondary market and the volume going down a lot in the primary market. However, I think that people still believe that the government will have to change its current policy. The current policy basically discriminates buyers. Lots of buyers are kept out. And because the local governments depend on the property market for financing, so this policy may not be sustainable. That's why I think the developers still don't want to cut prices. They are waiting for the government to change its policy. And as long as the primary market stays firm, I think that the price correction is temporary.
So, ironically, if we had the yuan or the renminbi revalued, this could also take the sting out.
Yeah, I think that if the currency is revalued sufficiently to get rid of the expectation, then the property market will really go down hard. I don't think that the government wants to do that. Chinese government wants the wage to go up, not the exchange rate. So I think that the market is getting Chinese government's intention wrong.
So what about the wages side of things is what we're talking about here as well?
Yeah, I think wages, China is entering a decade of rapid wage growth, mainly because that the one-child policy is impacting labor market, and other countries are not yet ready to take over from China in manufacturing. During this period, the wage will go up dramatically. I think manufacturing wage will double within 5 years.
We're already seeing that at, of course, Foxconn, but that's for reasons altogether separate, aren't they?
That's right.